Good morning. I'm Lorraine Harrison with About Marketing, and we're here today to discuss how you can stand up to the IRS. We have Steve Perry as our guest today. He has a book on just that, how to stand up to the IRS, and you can get this on Amazon. It is a world of tax tips that you need to know. Welcome, Steve.
Thank you.
We're glad you're here to educate us and figure out what we need to do to be safe and not get into trouble in the first place. This chapter is about what you do if you don't file your taxes. Now, personally, I'd be afraid not to file my taxes. They'd come and get me. But why do people do that?
Well, in most cases, it's a matter of priority. You run a business. Maybe you're a solo entrepreneur. You're trying to do everything yourself. Well, it comes time to file tax. I really need to get this done. And then something distracts you over here. Maybe license has got to get renewed, or you're out of business, or an employee just quit, or something. Okay, I'm going to get to this tax thing. And then a month or two later, oh gosh, I can do this thing. But I'm busy right now. I'll get to it. We do prioritize in life the biggest fires in front of us. Right?
Urgency.
Yeah.
It's urgent. It's urgent.
Yeah, and generally it's immediately urgent. Your employee walks in and says, I quit. Well, that's urgent.
Yep.
And it's very easy to put that tax return on the back burner. And some people say, well, I'm such a little fish. I mean, I only made $150,000 last year, or only $60,000 last year. And my profit was next to nothing. Yeah, they won't miss it on the file.
Don't we have computers if they catch us?
The IRS has computers for just that purpose. So the reason people don't file really comes down to that in their own mind, at that moment, there's a higher priority. I got a client that's accountant, he and his wife are counselors. You would think they recognize priorities, but they don't.
These are professional people, educated.
Yes, with masters and PhDs and all that. When the IRS comes, they will call. And they'll say, Steve, what do I do? Well, first we got to fix the tax problem. Because the IRS won't talk to anybody who is not compliant. If I call them up and say, hey, I want to negotiate an arrangement here, they say, wait a minute, the client hasn't filed the past 2 years' tax return. Conversation's over.
You have to get caught up before they'll negotiate with you. Okay.
Yeah. But the only thing I can get before returns are caught up are transcripts.
Transcripts of what?
Well, the IRS generates transcripts of any activity. Think of it as a record of any communications between taxpayer and themselves, including tax returns, refunds, notices they've sent out, letters they've sent out. And they also have wage and income transcripts, which come out every year. After all the W-2s and 1099s are due in, they'll say, this is what has been reported to us. I can get those without you being compliant, but I can't get any action done. So that's why I would start with transcripts, so I can see really what the big picture is. What does the IRS know, or think they know?
Well, what happens if I still don't, maybe, what are the consequences of not having filed taxes? Besides the fact they're going to, once they do it, they're not going to be happy and do penalties or interest or all that.
If they have enough information, first off, they'll send you a letter saying, hey, Lorraine, you need to file your taxes. There's a swift letter for it, and it's in legalese, so it's not plain and simple, but what it means is, Lorraine, file your taxes. Then if they have enough information, they'll do what's called a substitute for return. We call them SFRs. Well, that sounds great. The IRS is going to do my tax return for me.
How do they know? They have my income, but they don't have my expenses.
Very good. I had a truck driver client. They sent him a bill for $100,000 because they had the income, But they're not even trying to guess at expenses. Not for that.
Well, they probably got his attention now.
Yes, that's what landed him in my office. So once we've got, we get the tax returns done, then we can address everything. If you're only a couple of years behind, you may get the letter saying do it. SFR, substitute return, may take 3 years, or they may do it quicker, depending on your income level. If you're just above standing deductions, frankly, they're going to do it. You're not worth it. But if they're going to get some tax money, they're going after you. And so the thing to do is look, gee, I haven't filed the past 3 years' tax returns. Let's just get it done. Just, when I was a kid, we had horses. Horses would sometimes tear down the fence. And rather than waiting on them and saying, I'll get to it later, what did we do? We fixed the fence.
Oh, yeah, otherwise they'd be gone.
The same thing is true of taxes. Those tax returns may be your fence. They're your fence from the IRS that occurred in your life. So let's get them done. If you file late, you can be penalized. If you underpay, of course, you can be penalized. These are all things we can work on, but first and foremost, file returns. And get a professional to do it, because as a professional, I know what questions to ask and what deductions to take that you may not think about. I also know what you can't take that, has lawyers that say, oh yeah, you can deduct your clothes.
Oh, I can't deduct these.
Right now, if you can wear it, if it's reasonable that you can wear it on the street, walking down the street, you cannot deduct it.
But if it's a uniform, I'm saying for it.
Well, let's say a welder's protective gear. Yeah, deduct that all
What
day
about a
long.
waitress? You've got to have little, and she
Probably
wouldn't.
not.
Interesting, because you would think that's the only place she would wear it.
It depends. I mean, how many restaurants have you been to lately where they had an actual uniform?
What made me think of it is I went to one last week, and all the waitresses had on these. They were cute in the restaurant, but they wouldn't be cute out on the street.
Well, it might. One example that comes to mind is, well, I probably shouldn't say the names, I don't have the information, but they are themed such that they would attract young men.
Oh, I know who you're talking about.
Those sorts of restaurants, and there's 2 or 3 different franchises, they might be able to do it. Partially because their employers say you can't wear a uniform outside of work.
Oh, okay.
But other than that, no.
So, the IRS files a return for me.
Mm-hmm.
Do they send it to me? No, what, they just file it?
They file it and send you a bill.
Oh,
We can do
okay.
returns, so please send us.
Whatever amount of money with no deductions and no, so this is one of the times they call me.
No, they don't call you, they send you a letter. And I'm glad you said that. It gives me a chance to reiterate something. Here is your fraud prevention tip for the day. The IRS will never, underline, capital, bold, never call you unless they've already got a relationship with you. If someone calls out of the blue and says, I'm Johnny Jones with the IRS, and you need to send us a gift card, give us your Visa, pay it right now, hang up the phone, they're a fraud. It's a scam. The IRS will never call you.
Will they email you?
No. They want something in writing. Here's the logic. They need something in writing that they can present to a judge. They can say, see, we sent this letter, here's the postmark of when we sent it. This was the last known address. They have to be able to defend that in court. You can't defend a phone call in court unless you've got a recording, which is, you can't defend an email in court, but you can defend a letter.
Okay. Well, they're smart, so.
They haven't gotten to be the most efficient collection agency in the world.
Didn't you tell me that they had geared up, they're hired a lot of new people lately?
They have hired some new people, yes. And a lot of that's because a lot of the old collection agents, frankly, are retiring. They've been doing this for 30 years and they're done. And the IRS, like a lot of government agencies, don't hire consistently, and part of that's on Congress. They don't give them the money. So now they've hired some new people. They've reactivated the computers. Collections is out to make money. That's what they get judged on. So they're going to do it. And they're going to be in your back pocket with a letter first,
So you're not in trouble until you get a letter. Although we probably know that we're in trouble.
You're not really in trouble till you get about the second or third one. But you don't want to wait that long. When you get CP 2000, that's when you want to act. Because at that point, it's a proposal. If you wait until you get the next letter in 30 days, now you're in trouble.
Okay. This chapter says, reminds us of some of the things that if we haven't filed our taxes,
Okay.
what we can't do. And it said that you lose your tax refund.
Yes, this is black letter law. If you were due a tax refund and it's more than 2 years since the due date of your return, you lose the refund.
What do they do with it? They apply it to my account?
No, they apply to whatever program they're applying it to that day.
Well, that sucks. I'm sorry.
You are one of 1,000 people that have said that to me. But here's the flip side of it. Why didn't you file a return?
Okay.
Now, there are sometimes, you know, and I don't want to seem unsympathetic. There are sometimes when life does get in the way. You know, heaven forbid, somebody died. What happened in North Carolina with that hurricane? Yes, but by the same token, when the situation has resolved to some degree, you still have the responsibility. And, you know, if you wait 2, 3, 4 years to file a return and you were due a refund, in all honesty, I don't want to sympathy for you. You could have fixed that.
I still think it was my money and I wanted it.
I agree. Now, see, you said it exactly right. It was my money. It isn't anymore, but it was. What you did is you made a contribution to the federal government, and they appreciate it.
I expected a thank you card or something. So.
Well, don't hold your breath.
The second thing that it said was that you can't borrow money or get a mortgage.
Good point. Okay. I have seen this happen where someone goes to take out a mortgage. And mortgage companies don't just pull the free credit reports that you see. They get more information. And if you owe the IRS a significant amount of money, they say, whoa, stop right there. You can't underwrite this mortgage until you have a plan for that in place. So you file the returns, you know how much is owed, and then it's just one more bill in the financial statement. But if you haven't filed, the mortgage company knows that the IRS eventually will come after that. And if they're not already in first position, they're in an untenable position.
So if somebody has a mortgage, has a house and a mortgage, and the IRS is coming after them, are they the first or are they behind the mortgage?
They're behind the mortgage.
It could be a lien.
The way liens happen, and it is a lien, the way liens happen is first is in order they're set. So you buy the house, there's your mortgage. And then, you know, IRS liens or mechanics liens or any of that. The only exception to that are property tax liens that I know of. Property taxes are what are called super liens. They go to the front of the line. Why do they get that special treatment? But IRS liens fall behind whatever lien is in place.
So when you're selling your house, all of those people get paid before you get
in order.
equity.
Yeah, exactly right. You sell a house, okay, let's say you sell the house for $500,000, the mortgage is $200,000, and you owe the IRS $500,000. Mortgage company gets paid, the IRS gets what's left, and you still owe $200,000.
This is depressing.
Well, it's depressing because the cases we're looking at here are cases where people didn't do the right thing, didn't ask for help.
Okay. So we should all be responsible and just follow that. Now, does the state have the same power to do all this you're talking about at the federal level? We need to worry about them too?
Yes, well, to a degree. I mean, they're not, generally don't file substitute for returns, although they may take the federal one. Georgia follows the federal government pretty close. They can put a lien on your house. If they get to the county seat before the IRS does, then their lien will be in place first. They're usually done. The IRS is pretty quick. They can also garnish your wages, like the IRS. They can freeze bank assets, anything like that. The state just doesn't have as much money in their Department of Revenue to go after you. The federal government. They can't print money on
They don't have the staff to.
Have to.
Okay. Well, Steve, you convinced me, not that I haven't already been filing my taxes.
Good.
You convinced me that that's something that we need to do on a regular basis, and if we haven't, we need to get on it right away.
Good.
And so I'm saying the longer we put it off, the worse position we're in. Is that correct?
That's correct.
Well, thank you so much for your help today.
You bet.
And good to see you, and I hope everybody learned something. Don't forget, Stand Up to the IRS, Steve Perry on Amazon.